Hello everyone, and welcome to this afternoon's webinars. And I know I always say it's afternoon for us here in the UK, but wherever you are in the world, thank you so much for taking the time out to join us to see what is happening on the markets. And in fact, it's all going rather nicely at the moment. But before we do start, may I just draw your attention to the disclaimer that I know you can see on the screen. Please don't ever think of trading by using money that you cannot afford to lose. Okay, there we are. Right, where are we? Here we are. We are going to be looking at these, I think just the indices today. I think David's got, if you've got oil up there today, David, yeah, he's got, because his what? It's rampaging, absolutely brilliant. We're going to be looking at the charts. We're going to be looking at the market. On the charts, we're going to be looking at price action, volume, and the other elements that make up volume price analysis, in particular support and resistance. It's something we touched on this morning in the Forex webinar, and it was really came about as a tweet that I had. Someone had just sent me a little message to say that in this particular book, in chapter 7, that is the chapter about support and resistance, that having read the chapter, he was looking at it from a very different perspective. It's the first time that he could really understand what was meant by support and resistance. Well, we clearly understand the terms of support and resistance, but its application and what do you actually mean? What is it telling you on the chart? And support and resistance is one of the 5 pillars of volume price analysis. One of them is obviously price action. Then we have the volume that together they tell us whether the move is genuine or is it an anomaly. As I said, support and resistance, candles and candle patterns, and time. And that's both the time in the sense of the chart that we're looking to trade, but also multiple time frames. And that's something we really went into this morning as well. Right, what we've also done is to accompany that book, there's a companion book with all sorts of examples. In fact, this one's got 200, and it covers primarily stocks, the indices, and it's got some commodities. And there is a version for Forex as well, because the great thing about VPA is you get these signals and they just repeat, because as humans, you know, we never really seem to learn. We just tend to do the same things over and over again, and you will see the same signals appear. They will never be 100% identical, but you will see similar setups, you will see similar candle patterns, you will see similar groups of candles with volume underneath it. And as I said, and once you begin to, and once you understand that, and when you look at your charts, you will then begin to recognize them. And in fact, on my website, my personal blog, annacooling.com, there are there's 4 analysis of actually 4 stocks. And the reason we looked at those is because, and they're on the longer time frames, they're all on the weekly chart, and it's a great examples of how these signals can come in. Certainly on the slower time frames, you've got to give them time to develop. It's not, you know, and sometimes that can be a bit of a downside to VPA. In fact, you see these strong signals, they come in and they hit you between the eyes. You think, oh, this is what's going to happen. But how they develop is relative to the time frame. If you see something on a weekly chart, it could be 3, 4, 5, 6 weeks before there is a full development of that signal. But head over to my site and you will see what I mean. And just to reiterate, this is what we this is from the program, David. I think this is from our Forex education program, but it really applies to whatever market you're trading. Is essentially, this is your foundation. This is your trading methodology. As I said, volume, price, candles, candle patterns, and support and resistance, one of these 5 key pillars. And those are what we call your primary tools. Then over that, we overlay what we call our secondary tools of choice. And the secondary, they're not second best, they're just specific tools that work under certain market conditions. These are the most popular ones that you know of. And in amongst here, you would also put our the proprietary ones, and those are the ones that you will see on our charts that we have developed. We developed them for our own trading. Right, so before we go, I've got the MT4 platform. David has got NinjaTrader. A quick scoot over to what's happening in terms of sentiment. Well, we can see here clearly the YM, that's the US 30s futures, they are sharply higher. The S&P is also higher. What's the Nasdaq? Is it lagging a bit today? Yeah, it's a bit laggy today, and that, as we discussed last week, as I mentioned, this is because we are seeing this rotation out of tech stocks. We're seeing the big momentum stocks, these stocks that have provided huge moves, particularly in the Nasdaq, and there's a move towards what are known as value stocks. The Nasdaq not moving so strongly could also be an indication that tech is always, racing ahead if the economy is racing ahead as well, or it's in anticipation of the economic cycle expanding. Something is obviously, maybe the Nasdaq is picking something up. We'll have to wait and see. Certainly the devastation that's been caused by the virus certainly so far hasn't really played out, but it's very early days. And in fact, what I wanted to bring to your attention today is there are some incredible metrics generally in stocks, and this is I've mentioned this site before. It's called sentimenttrader.com, and there, as I said, there are some truly remarkable metrics at the moment, fundamental metrics, if you like, and technical metrics. But you may have heard people talk about market breadth, market depth, and market breadth. Market breadth it's a way of analyzing stocks that are moving, that are advancing relative to those that are declining. And there's lots of ways you can measure this. I mean, one indicator is advancers and decliners. And if you are a day trader, I suppose what it tells you is that, are you going to be swimming with with the current, as it were? If the current is very positive today, stocks are all moving higher. Would you be looking for, what about shorting opportunities? It's a way of trying to get a feel for what the overall market is doing. Now, these are the statistics that have come up, and that is that the percentage of S&P 500 stocks above their 200 daily moving averages in a long-term month is the highest level in 5 years. That's very significant, but it's not just the S&P. I think it really goes onto the other indices as well. You've got the Russell. Again, the value stocks are finally moving higher. They've really lagged the momentum and tech stocks. And it's not just the S&P. It seems to be global. This seems to be a global phenomenon. And in fact, I think you can go and check this out yourselves later. But it seems that in the last 2 weeks, what did I find? I find that there has been the largest inflow into global stocks, I think, for I don't know how many. In the last 2 weeks, there's been the largest flow into global stocks. It's just the number is phenomenal. So what does that tell us about market sentiment and market, the mood of the market? Well, it's clearly extremely bullish. Now, this is the equivalent of the YM, which is the Dow Jones Future on my MT5 platform. The great thing about MetaTrader, whether it's MT4 or MT5, is you do have this opportunity to trade different asset classes. So you don't need a futures account. The data feed is provided for you, so you don't have to pay for data. And it's a really nice way to be able to sort of dip your toe into markets that possibly you would not normally consider, as it were. I'm just going to move this. I've got this box in the way. Here we are. Let me just close it down a bit. There we are. Let's move it over so I can see. I know you can't see this, but it's quite annoying. Let's move it over to the other screen. There we are. Right. Those of you who came last week will see on this particular platform, I have a 5 chart configuration. I have a Renko chart. This is my non-time based chart. Then I have a 5-minute chart. I have the 5-minute chart again, but on this chart, I'm only showing price action, volume. I've got the volatility, but the key for me for this chart, we talked about support and resistance. This is a particular indicator which is defining for me those key levels of support and resistance based on the Camarilla protocol. But you only have to look at the price action. If I just expand that slightly, no, it won't go any further. If you only have to look at this price action, and you can see, what are we looking at here? We are in a congestion. We're actually in a congestion at a key level, which is the R4. If it breaks through this level, it is considered to be a valid breakout. But as always, with breakouts, you will have a breakout, it seems like a breakout, and a back on a retest. But essentially, it's been in congestion until the start of, until the Wall Street Open, which we have here. This volume is then compressed, because obviously you have the volume surge that comes in at the Wall Street Open. But what you also have to consider is that although this is only the 5-minute chart and the price has been moving sideways, the bulk of the move in the indices has actually been, as always, in Globex. And in fact, if we look at the hourly chart here, which is actually quite interesting, this is yesterday, and we know that because we have much higher volume than the volume we see here. This is volume in Asia. Once the market was coming to the end of Wall Street, and in fact up in Asia, it actually carried on higher. So if you like, most of the move that we've had today has occurred overnight, and where we are now, we're on this little bit here. Now, for those of you who are in the States, who are now coming to, looking to day trade, and you have seen this huge move, and you're looking at the YM, and what's also critical with the YM, it's also approaching a very, very important level, which is the 30,000 level, which we looked at last week, those of you who were with us here. And if we looked at, this was last Tuesday, it had tried to break through, I think it did go through 30,000, it pulled back. So that was Monday, so must have been some vaccine news, and there was, which is great. Then we had Tuesday, Wednesday, Thursday, Friday, and of course, what do we have here? We have a bullish engulfing candle. Why? Well, we've got we had more vaccine news yesterday, this time from AstraZeneca, but look what's happening. It's now coming up to 30,000. Well, it has to go through to carry on higher. Will it go through? Well, the market would like to think so. As I said, we have vaccine news. We also have a certain amount of uncertainty that's been removed from the US election. I believe there's a committee called the GSA, this transition committee between one president and another. I believe that committee has now started. So, maybe is Donald Trump going to concede? He says not. The two things, they seem to contradict one another. On the one hand, you've got the transition. On the other, you've got all the challenges, if you like, to the various votes. But according to the market is now looking ahead. We've got Thanksgiving on Thursday. We've got the FOMC tomorrow. You've also got Janet Yellen, who is supposedly to be the new Treasury Secretary if the Biden presidency does come about. That is, put all together, that is what the market is liking at the moment. But support and resistance, go back to support and resistance. It's good. It all looks good. What does our Renko chart say? Well, you can see here, once we broke through this high here, then you could certainly take that as a move to the upside and a potential entry. We've got blue dots. We've also got blue, consistently blue, bright blue on the trend monitor. I've simply put this line here to tell me when it was the open, basically. So I've got a feel for what is happening, what has happened on the Renko chart, because I haven't got any other period separator on this particular chart. But I'm also acutely aware that it is now reaching this key 30,000. Where are 29,965 now? So there's two ways. The support and resistance will help define where you are in the price cycle, in the sense that, are you in a trend, or are you because you're approaching a key level, or are you in a congestion phase? And a congestion phase is denoted, as I said, you have sideways. The way we denote it is we have these pivots, top and bottom, and it's an even stronger congestion phase, particularly when it is rotating around a key support and resistance level. This is price based. I haven't even talked about the volume point of control, which is volume based. And so the longer this stays in this price state, if you like, when it does break, the move will be more explosive. Support and resistance then comes in the sense of, well, where is it targeting? What is the objective? Well, I've got my lines, marked up on this particular chart. What it also tells me is where to place my stops as well. So support and resistance, gives you so much information about what the price is doing at the moment. Where is it likely to be heading to? How can I use it as part of my money management and risk management approach, as it were? But we also, and as I said, I have these in two time frames, and the reason is because the levels I have on the charts below 1 hour are different, are refreshed every 24 hours. So these levels will change for tomorrow's session, whereas on the hourly chart, they will actually remain in play up from the hour to the daily. They will remain in play for the rest of the week. We're actually at the number 5. The key one is the 6. We have 6 levels according. Our camera levels go to 6 levels. People only use 4, and certainly if it gets to 6, likely to congest again. But if it does break through, that will then provide some support to go higher. And where do we go after that? Well, we're going to be into new high ground. This one I do have on the weekly, and I'm not sure if it's going to show up because sometimes it can be a little bit scrunched. Let's have a look on the weekly. I can find the weekly chart. There we are. Let's have a look. Where are we? Yes, in fact, the weekly ones are for the whole month, and in fact it's already gone through the 6. So really it's, well, how high do you want to go? We will see what happens between now and certainly Thanksgiving, and then once we all come back, then it's the countdown to Christmas. Right, sorry, I knew I wanted to say something. It was a question we had from one of our Forex students because we had a very similar situation where on the slower time frames, both the dailies and the weeklies, the price action was so phenomenal. It had actually chewed through all the levels, and he said, well, what do I do now? In that case, you go back to the daily, because as I said, the daily levels are recalculated, so you will get fresh levels for fresh fresh targets, as it were. So that's what I meant to say with the Camarilla.
Thanks, darling. Very warm welcome to you wherever you are in the world. Good to have you here. I thought we'd start with, I've got eyes on other markets. I've got the VIX up. That's falling quite nicely. It's down at 22.09. It's just ticked down to 22.07 literally as I'm talking. So that's helping push the indices. But the one I picked up to start with is oil. And it's quite scary because we're on January 21. We've actually gone through Christmas already as far as that contract's concerned. We're into the January contract, which is a scary thing. But there we go. I have got, yeah. Just a classic example, and this could be any chart. It happens to be oil, but it really could be anything. You know, it doesn't matter. The application of EPA, the application of the indicators works in exactly the same way. I've got the 15-second, the 1 minute, the 3 minute, the 5 minute, the 10 minute, and the daily down at the bottom left, bottom right here. Oil, for those of you who follow it and trade it, it's been in a congestion phase for an awful long time, trading around 37, 38, up to 42. Couldn't get through there. It's been trying and trying and trying, and finally, let's pop that up full size, make it nice and easy. Move the chat box out of the way. There it goes. Move it down there. Finally, we managed to break out, which is happening today. What will be interesting is the volume down here. I've actually switched this on now, so it's live. So this is coming in literally tick by tick. But for that sort of level of move, you would expect to see, and if you look across the chart, you're looking for a sort of comparative candle. Well, it's not quite the size of this one, but you can eyeball the amount of volume that's under that particular candle. And I would suggest at the moment this looks a little bit lightweight. So it'll be interesting to see what happens. The one thing I would say is certainly, and you see this a lot with US holidays particularly, you see it in the UK, we tend to see it towards Christmas in the UK, where you'll get very volatile price action, be tradable moves, but they will be on light volume. It's a great opportunity for the market makers to get in and make some money. We saw it a couple of weeks ago on one of the holiday days where the market ramped up very quickly, and then during the rest of the week, it was coming down again quite sharply. So don't be surprised to see that certainly around Thanksgiving. Friday is going to be quiet because a lot of traders will take that weekend as a 4-day weekend, Thursday, Friday, Saturday, Sunday. It's a classic case. You'll maybe see strong moves on light volume, and then the market reversing next week. So do not be surprised. This could be a precursor to it. As I say, looking at the volume down there looks a bit lightweight as far as I'm concerned. But nevertheless, from an intraday perspective, all very much tradable. You can see the trend monitor. It was 100% bright blue across the piece. Obviously on the 15-second chart, that's where you start to see the minor reversals coming in. And if that minor reversal is not just a reversal or pullback, but actually translates into a full-blown reversal and a tradable trend in terms of reversal, then obviously it will transition from that bright red. We will see maybe a darker blue, maybe a dark red here, and on through the time horizon. But at the moment, absolutely nothing. They're all bright blue right the way down. When you look to the slower time frames, what you're looking for is guidance as to clues and signals as to where we are in the faster time frames upstream. And the thing that jumps off the chart, jumps off the screen, is the fact that we are now at the volume point of control up here for this particular time horizon. Therefore, what do we expect? We expect to see congestion. It's what we're seeing right now, so it comes as no surprise. And using 3 or 4 charts is it's basic, because it gives you all the detail of slower time frames. And as we say repeatedly, slower time frames, whatever happens on a slower time frame will trump a faster time frame, purely because it has the weight of time behind it. Whatever has been happening, whether it's a support or resistance level, whether it's volume, whatever it is, that will carry more weight by virtue of the fact that it's been there for a longer period of time. So a 5-minute chart will always trump a 3-minute chart, a 3-minute chart will always trump a 1-minute chart, a 1-minute chart will trump a 5-second chart, and on upstream in the same vein. Just drop that out of the way. Hence the reason we're starting to see a little bit of a pause point coming into this rally. You can also see it reflected. We hop onto the 1 minute. Let's see what we've got going on here. It was kind of highlighted here. We had this big surge in volume. That's not terribly strong. You've got weakness coming in, lots of volume. The market is looking toppy. It's no great surprise. You've had this big rally. Traders in oil have been waiting for this sort of day for a long time. They're all jumping in, enjoying the ride higher. Then they're all cashing in. It's no great surprise, big volume coming in, and the market goes into congestion, tries to rally again. Then we get some more weakness coming in over here. We get more volume driven in. This market is now looking weak, and we're starting to roll over. Where are we going back to? Probably down to the volume point of control on 1 minute. That said, if you're trading a slower time frame, you may well only be looking at that out of pure curiosity for the time being, because you are quite happy to sit in that position and maintain a long position over a slower time frame, slower time horizon. We hop down onto the 10-minute, for example. Here again, you start to see though that signal of weakness. We had a volatility candle. We had one down here. Didn't really follow much into the congestion, just followed straight on. We had another one. Again, similar sort of pattern. We didn't get any follow through on that one. That's fine. They don't always go into congestion or into reversal. You just accept the fact that is what you're expecting to happen, and it doesn't always happen. There's no always in trading. Then we go on to the next level. What do we get? We get higher volume still. In fact, the highest volume of the day, or of the session rather. Big wick to the upper body, narrow spread candle. Lots of volume coming in. That's weak. Yes, the market's followed through, but it's the thing about VPA is it gives you these advanced warnings. It's not always the case that that particular candle is going to see an instant reaction, but it's the fact that you are starting to see signs of weakness or signs of strength coming into a particular market. And really that's what it's about. So as we always say, don't take the first signal, just take it for what it is, read it in conjunction with slower and faster time frames and put it all together in that way. Just seeing where we go. Now you're starting to see, for example, this is obviously bright red, this is 15 second. So, you've had all the fireworks, you've had a volatility candle, big load of volume under that particular candle. That's not looking strong, is it? I mean, it's just selling in that candle, no question. Going sideways, then we roll over back down to volume point of control. Are we going to break lower? If we break away from the volume point of control to the downside, the good news is it's only 2 cents a barrel here, but it typifies the power of the volume point of control. And we use it, as Anna was talking about support and resistance, we use volume in the same way, because where you've got these larger regions of volume, they are going to cause the market to pause because there is a huge wedge of volume sitting there. There's all sorts of orders sitting there. There's traders trapped in there. There's all sorts of orders sitting there. In these low volume areas here, there is virtually nothing. It's very light volume. So if the market breaks to this level down to 74, you would expect it to go through 74, 72 down to 70 pretty swiftly, because there's nothing in the way of volume there to support it. You've got some very minor price level here on the accumulation distribution indicator to support it. In fact, it's 2. It's a little cluster of 2 there, of 2 levels, two minor levels, which when combined will give a little bit more strength. But other than that, you've really got nothing there. So for a move to the downside, it's going to move through there quickly. Then the volume starts to build up again, so it's going to create a bit more of a barrier to the downwards progress. So as I say, we're trading around the volume point of control, and we now have to wait for the volume to be confirmed on a breakaway, move away from there into a decent trend lower. What are we seeing over on the 1 minute? We're starting to see that ripple through effect on the trend monitor. So we've gone from bright blue into darker blue, coming out into darker red now. There is a shift in sentiment. Now, if this starts to change to red, this goes back to red, this starts to go to red, this one here then starts to shift across as well, then we're into a decent change in trend from bullish trend into bearish trend, and ultimately, of course, it'll go right the way down across, ultimately, of course, right the way out to the daily, but it's not going to happen today. Might happen next week or the week after. Let's just head back onto the indices, see what's going on in terms of sentiment. The VIX has spiked up a little bit. It was down at 22. So it's actually now trading at 22.20. So it's spiked up. So the bullish sentiment is going to come off a little bit. This sort of rally, this minor sort of rally that's been going on. Let's have a look at, they're all pretty much the same. Let's go to the YM. There we are. Yeah, this was the open. We always see the big surge in volume, and it's always curious to me that a lot of traders don't trade Globex on its own because there's no strong trends here, particularly there, but these are tradable. I mean, this is, I don't know, an hour in here. But when you compare the price action in here, or you compare the price action in here, or indeed the price action in here, it is very stately. It is very measured, even paced. there's no great volatility. And as soon as you get the cash markets open here at 2:30 our time, wallop, in comes the volatility. It's what you see almost every single day without fail, this racking about. You then have to wait and be patient for all this to settle, for the volatility to dissipate. I think we've had news that there was some news at 3 o'clock, wasn't it? I think. Confidence. So, you overlay all that, and it always amazes me that more index traders, provided it suits them, obviously we are very fortunate in the Northern Hemisphere that all of this market activity is available to us at nice hours. We're not asleep, which is great. I do appreciate that for a lot of traders, Globex is not an option, but all I would say is when you compare the price action, it's pretty self-explanatory that the sort of trends you get within the Globex only trading electronically, it is a much more even-paced type of price action without the volatility. You can see where we are. We've got the volume point of control is in evidence really across all three markets, trying to rally, big wick to the upper body, more wicks here, wicks all over the place here. The market is trying to rally, and we have seen this divergence between the NQ and the other two, so you've got to be aware of that. We've seen periods where the NQ is rampaging higher and the other two are lagging, and indeed on some occasions they were negative, and now we're seeing the inverse of that. We're starting to see that maybe the NQ is starting to struggle a little bit while the other two are more positive. As you can see here today, this is the daily, this is the move on the YM. That's where the NQ is literally in a razor blade of price action in there, and the ES is also trying to follow. So as Anna said, we are seeing this rotation effect from out of NQ, out of NASDAQ, out of tech, IT, into the more diverse markets represented by the YM, and particularly by the S&P 500, which the ES is the derivative futures contract. Let's go back onto oil to see what's going on. We'll pop in on gold. That's taking a beating at the moment. See where we are. Okay, well, we're trading around the yellow line, which is our fulcrum of the market, the volume point of control. Got the VPOT pretty much everywhere now. That one's well below on the 10-minute. So it's a question of waiting and being patient and seeing whether this market is going to break. But that's where we are at the time being. We're in congestion. Now, with oil going up, the other thing that's also been happening is obviously that has helped the Canadian dollar. It's helped the Canadian currency. That's been getting some follow through. There we go. So that's the CAD. This is against the yen. So in a way, if risk on sentiment prevails and we've got rising oil prices, we've got a kind of double whammy for the CAD yen because it's getting bought and also the yen is being sold at the same time. So it should actually help to drive that particular currency higher, which is what we're seeing right now. Not seeing it universally across the Canadian complex at the moment. Let's go back onto the individual ones there, just on the YM. In fact, let me just go onto the matrix. Just have a quick look at the CAD pairs. Where are we? There we are. Got the CAD isolated out here. So it's not, this is on 1 minute, this is on 5, 10, and 15. You can see where the CAD yen is. It's up at the top here, which is why I pulled it up. It's also up at the top on 10. But it's a little bit more mixed on the other pairs. So in terms of, certainly in 10-minute, you've got a full house, which is great. And in terms of full house, what I'm talking about is basically the CAD Swiss here moves up to the top. So that's all at the top. So you've got CAD buying there. And then these all move to the bottom where the Canadian dollar is the counter currency. So basically you've got a full house of Canadian dollar buying. In other words, the market per se is buying or selling that particular currency across the piece. It's more mixed on these faster time frames, so it's coming to a little bit of a pause point. You really want to see these pick up again. You want to see the CAD moving up, the CAD Swiss. You want to see the CAD yen moving up. Same over here. You want to see this one falling down here, and you want to see the CAD Swiss moving up to the top. But then, as you would expect on a 1 minute time frame, it's pretty quick down there. So what you will see in terms of a, let's call it a cycle, where one currency moves from the top to bottom and back up again on a 1 minute time frame, that is just a pullback, unless it's reflected across the slower time frames. If it currency starts to come off the top, and then you start to see it on 5 and 10, that is telling you that yes, that is a change in trend. The sentiment towards that particular pair has actually changed, but at the moment it's holding pretty firm. You can see it here on 10. As I say, that's a nice full house, but you want to see that reflected down here. You don't want to see this level down here breaking up, these currencies starting to break apart, and then you start to see it over here, and ultimately you'll see it reflected over on 15 as well, and obviously on out to 30 as well. That's on pound yen this particular time, so you're seeing that move higher. This is on pound dollar, so again pound there. Aussie dollar, Aussie is moving up. You've got the dollar over here, so you've got some dollar selling coming in to the market right now, which is pushing up those particular pairs. Let's go back to the three of them, just see where we are, see if anything's changed very much. Doesn't seem to have done. We're still moving sideways. The VIX is now moving sideways. It's 22.17, so there's no great momentum in the VIX at the moment. Let's pop that up. This was the 5 minute on NQ. Got a strong level of resistance in here at 950. Another level down there. The ES. Let's have a look at the ES. ES on 5. That's trying to break higher as well, but it's having a real struggle. Wick to the upper body here. You've got another wick here. It's really struggling to break away, and say the VIX is just moving around sideways at the moment, so it's a question of just sitting tight. If you're a day trader and you I would say you have to trade these markets, but if you are comfortable trading faster time frames, then to trade in congested markets, you've got to move down to these faster time frames. This is 15-second, which I use a lot. The principles are exactly the same. Volume is exactly the same. The price volume relationship is exactly the same. The indicators work in exactly the same way. It's just at a very fast pace. And you have to be comfortable with it. If you're not comfortable with it, don't do it. It's as simple as that. But as I say, in markets like this, where everything is going sideways at the moment as far as the indices are concerned, then if you're comfortable taking scalping trades at this sort of level, then fine. It's no big deal. But don't do it if you're not comfortable with it. You have to feel comfortable with what you're doing in trading. If you don't, then stay away from it. If you're more suited to slower term, longer term trading, absolutely fine. You don't have to worry about all these sort of wild moves down on the 15-second, 30-second, and minute charts. You're just looking at the hourlies, maybe the 4-hour daily, something like that. Absolutely fine. But even on this time frame, there's nothing at the moment that I would pick off to trade, because again, it's just moving sideways. You just got to be patient and wait. You can see the resistance level coming into play there. That's on the accumulation distribution indicator. And what you'll often find is when the markets are very tight and range bound around the volume point of control, you get really well-defined channels above and below, which help to define where to place stop losses. That's going to come back up to the VPOC and just sit there and probably test it for a while. Maybe hit this level again. Excuse me. And again, as I said earlier, picking off the VPA lessons, you can see it here. I'm always looking for the anomalous large candles, because they give you an immediate hit, if you like, a nice fix of strength or weakness. You can see it here, lots of volume coming in. Where's that particular candle gone? Absolutely nowhere. Because if you compare it with the previous candle, and bear in mind, this is from 15:25 our time, so there's half an hour in here. So we can compare like with like, whatever we like with whatever we like. The volume in here is huge. The price action in here is nothing like it should be. If that were the volume, then the price action should be off the top of the screen somewhere, and it isn't. Because if that were true, if the previous candle were true, then why have we got so much volume coming into this particular candle? So clearly the market is weak at that point, and there is heavy selling going on in that candle, trying to force the market into a market that's absolutely resistant to higher prices. The analogy we use in the program, the analogy we use all the time, is one of driving uphill, driving up a mountainside, a steep mountain slope, which is covered in ice, and you get to a point where you're applying more pressure to the gas and the wheels are just spinning because you're just not going anywhere. And that's the analogy that kind of sums it up, where there's a lot of pressure going in, but nothing is actually happening, so it's weak. And you see the same to the downside, where you get heavy selling and then you get stopping volume coming in, and that's the buyers moving in. This is the sellers moving in at that point, and off down we go into a waterfall. It's not huge, doesn't go on for very long, but nevertheless, there's enough points in there to actually grab them and take something out of the market. Here we are, we're just trading around this point. We got through there, but then we hit another one. Are we going to come down, have another go? Possibly, or we're just going to sit around this level for a while. The volume down here is pretty low under the selling, so there's not huge selling going on under these three candles. They're just average, no great heavy selling. A little bit of buying coming under that, but again, not particularly strong, certainly not enough to turn the market around right now. Price and volume in agreement. Back to the volume point of control again. Hitting some resistance on the blue level there. Is it going to break through? Is it going to chop around in this region? Maybe. Very low volume under that candle, more or less in agreement, but not particularly strong in terms of thrusting higher. That's okay. And if you were looking to trade this either one side or the other, if you're looking at it as an upside opportunity, then you've got to define those levels where you believe they would be comfortable for you to consider getting in. And for that, you go up and down the time frames. You start to look at where you've got strong areas of resistance. We've got this blue level here, again, defined for us by the accumulation distribution indicator. We've got falling volume here, so we've got a market that's falling under falling volume, so it's not going to fall very far. Now we're trying to push through this level. What is the level you'd be comfortable jumping into this market at? Might be 940, might be 950. You might want to pass this top here and get away from all this stuff here, because by the time you get up to 940, you're starting to move into this low volume region up here. So if we move up to the next chart, up on 3 minutes, what's 940 looking like? Probably not a bad area to consider. We've got a couple of spikes here, but again, the volume is falling away. Let's go up onto 10. There we go, and the same sort of picture. So you've got the doji, possibly a 2-bar reversal building here now, through 940, clearing all this top here, getting through all that into a low volume area, and obviously you've got the 15-minute here as well. And you keep going on down the charts. You go down to the 30-minute, have a look at the 30-minute, just giving you perspective all the time on those levels where you would consider a potential opportunity to trade this particular market right now. Start again, back at 15 seconds, not going anywhere. VIX is still at 22.14. Oil, I think, is still climbing. Just have a quick look at oil in a minute. Let's come back to this in a moment. See if oil's come off at all. There we go. Still sideways there as well. So it's had a good run for the day. May have a little bit more left in the tank, but the selling there is increasing. So you've got two down candles, got rising volume there. So the selling pressure is increasing, plus we're trading around the volume point of control as well. Up onto 10. Okay, looking a little bit weak, bit toppy. You've got a wick there to the upper body, decent volume under that particular candle. Go back onto the where we were. Here we are. Okay. Just see if any others, see if the NQRES are moving. The NQ is starting to pick up a little bit of momentum. It was an absolute razor blade before. So maybe let's just flick over again onto here, change this over onto the YM, onto the NQ rather. There we go. Okay. So I look around here. Okay, now we've got a very strong VPOC area around here, starting to break. Could be an opportunity. We're through this roof here of potential resistance. Doesn't look too bad. Got through there, through that low volume node. Bit of congestion. Support coming in, volume under here, narrow spread. So, you know, it's supporting the downwards move, a little bit of buying coming in there, trying to push higher now up through the low volume node there. So that could be worth a punt. Probably not staying in for too long for the time being at any rate, but maybe an opportunity for smash and grab. Trend monitor here has gone blue, blue here, that's fine, blue over here, starting to transition to blue on 5, there we go. Doesn't look too bad. Into the low volume area, we want to see it break away. Volume here looks very low. There we go, that's not too bad, that's fine. Okay. And the VIX has dropped to 2212. But you're not staying in for very long at the moment. It's smash and grab stuff. Up to 76, up to 77. It's okay, it's nice, few points. What you don't want to see is any volatility triggers coming in now. Up to 79, 80, nice, on we go. Just see what the others are doing. Come back. Yeah, they're all they're following suit. So that's good. So if you're in here, you want to see these following suit. You don't want to see this in isolation, otherwise you're trading in isolation and not necessarily with the universal flow. That's not to say they all always travel in the same direction. I said before, they don't. So there's a few points to be had in there. I'm just going to switch off for a moment, grab a drink. Hold on. Sorry, it was getting a bit dry. There we go. You can see it here. We're up to 82. So, you know, it's pushing on. It's pushing on. Let's just go back onto the multiples. There we go. There we are. Nice. And, you know, it's pretty comfortable. There's nothing scary in here. There's no volatility. It's nothing to frighten the horses too much at the moment. It's just sort of, you know, ticking up there. And this is the point. You have to wait, in my humble opinion. There's no prescribed time you have to wait once the cash market's open, but you have to wait for it to settle, things settle down, market news to go through, the markets to settle, the volume to fall away from the peak that you get at the open. And then the price action generally becomes more stately in terms of progress, and you know it mirrors, if you like, the price action that you tend to see on Globex when it's trading in isolation. Not always. And as I said earlier, that's what always defeats me about this business as to why more traders don't trade Globex on their own, running individually, because the price action is much more considered and more even paced, and I think it's easier to trade, in my opinion, having done this for some considerable time. So there we go. The trend monitor is helping to keep us in, which is what it was designed to do. We're using it in multiple time frames. It's blue, blue, blue. Blue is the color. So it's just great. And you've had the transitional colors go through, and it's just helping to give you that confidence to stay in the trade. And then you're up and down the time frames, looking at related markets, keeping an eye on the VIX, see what the VIX is doing. You know, what's happening in terms of risk currencies, what are they doing? You know, we all aligned, we're all going in the same direction. And at the moment, in a very measured way, we are, but it's not, you know, it's not rampaging high. We've seen days of 1,000 pips, 1,000 points, all the rest of it, but it's enough. So there we are. I am going to wrap up because we're coming up for full time. Just to highlight where we are on the internet, this is Anna. You'll find Anna at annacooling.com. You'll find all the analysis there. We do a lot of analysis of oil, gold, all sorts of stuff, more stocks now. So that's all up there. And you'll also find all the books up here on Amazon, either in Kindle format or in paperback as well. This is the Forex education program, and now we have added to that the funded Forex program. It is only available to quantum trading education students, and the reason for that is simple, because I know we have some students in the room. We want you to have what we consider the best education if you're going to trade Forex. So this program is not available to anyone else. It's only available if you are on the program. You are more than welcome to join. It'll take you from a $5,000 funded account or a $5,000, $10,000 or $15,000 funded account, depending on where you want to start. It'll take you all the way up to $2 million. It's just a phenomenal program. We've put it together to give our students the opportunity to leverage that knowledge. Basically, learning is great, but you want to put it into practice, and you want to put it into practice with a large account, because a large account will give you the confidence to trade those sorts of sums of money. And what it will also do, the rule set we've put together will give you that disciplined framework of trading those large sums. But in starting at the evaluation stage, which is the $5,000, $10,000 or $15,000 account, if you can succeed at that, and we set a very simple profit target, a dollar-based profit target, if you can succeed at that, then you've cracked it, because the larger account is just more money. You're not trading in a different style. You're doing the same things over and over again. And once you have that consistency with a $5,000, $10,000 or $15,000 account, the world is your oyster, because you then go to a $20,000, $40,000 or $60,000 account, and we then double it thereafter, right the way up to 2 million. And all you've done is you've proved your consistency, and you're just replicating it with larger numbers. So instead of trading half a lot, you're trading full lots. It's as simple as that. So it is there. We literally launched it a couple of weeks ago. We've had a fantastic response to it. So if you are on the education program, or you're looking to join the education program, you may be a quantum trading software customer. We will always give you a credit for indicators that you've bought in the past. It doesn't matter whether you bought them 4 or 5 years ago. If you're coming back to Forex and you want to get into the program, we will credit you with what you've spent with us, so you don't have to pay the full whack, because the program includes all the indicators as well. You can find all the indicators over here at quantumtrading.com for MT45, NinjaTrader 7.8, and TradingView. Yes, TradeStation is coming. It's been an awful long time. I do apologize. There are 2 versions, 9.5, which is the one with interactive brokers as the live data feed, so you can trade using interactive brokers, which is a deep discount brokerage, through the TradeStation platform. And the second launch is the TradeStation Securities, which is version 10 and above. It's got radar screens, it's got fantastic tools and indicators in there. It's a brilliant platform. Once we've launched that, which will be before the end of the year, we will be dropping back onto TradingView and porting across all those indicators that are not available, purely because the Pine script couldn't handle the complexity of our indicators, but it can now. We've got object view, object drawing, and line drawing. So we can now bring over the matrix, the heat map, and the array. So they will be bolted onto TradingView. If you have the full package of TradingView at the moment, you will get those free of charge. because once we've done that, then the cost of that particular package will go up to be aligned with the MT45 package as well. So that's it. I'll just see if there are any more questions. Let's have a look. Pink is the color. Thanks, Michael. Good. Yeah, absolutely. The volume does look a bit low. If you're referring to the move on the oil, it certainly does to me. It will be interesting to see how that pans out in the next few days. I will not be surprised to see oil come off, if not a little bit, maybe a large bit. We will see. Anyway, there we go. Thank you so much for coming along today. Hope you've enjoyed it, and we do appreciate you coming. So thank you for sparing the time with us. We are back next week, London time, 7:45 for the UK Forex session, and this session, the US session at 3 o'clock UK time in the afternoon. Enjoy the rest of the trading day. Enjoy the rest of the trading week. Stay safe, and a very happy Thanksgiving to all our American customers, especially. Enjoy the day, and I'm sure you'll probably have a 4-day weekend as well. I certainly would. So have a great day. Enjoy it. Enjoy the rest of the week, and we will see you again soon. And bye for now.